Foerster, Chair of the IFAC Small and Medium Practices Advisory Group. I'd like to invite the panelists. Please welcome
Recording in progress.
So we have with us Ms. Monica Foerster, Chair of IFAC Small and Medium Practices Advisory Group. I'd like to invite Mr. Ian Carruthers, Chair with the International Public Sector Accounting Standards Board. Mr. Ian is also the Chair with the CIPFA, which is the Chartered Institute of Public Finance and Accountancy. I'd like to extend the invitation to come on stage to Ms. Assietou Diouf, Managing Director, Finance and IFRS Advisory Council. We all will agree that for any economy, SMEs play a very pivotal role, both in the private and also not-for-profit sector. So IFRS, that's the International Financial Reporting Standards, for SMEs is being updated for the new IFRS issued recently. It forms the basis of the first ever international not-profit accounting guidance. So in this session, the key features of both the exposure drafts will be explained and their practical impacts discussed. Over to the moderator, Ms. Monica. Thank you.
Good morning, good afternoon, and good evening for those that are here and for those that are virtually also. So our panel, as it was mentioned, today is on building trust, improving SME reporting. Our session is about a theme that impacts significantly SMEs, which represent a significant percentage of world's businesses and are responsible by millions of employments all around the world. As it was said, SMEs are critical in private sector, but also in non-for-profit sectors. And it's key that we have elements and support to make these sectors, private and non-for-profit, prepared to face with quality their information. IFRS for SMEs is being updated for the new IFRS issued recently, and Michelle will be presenting with more details on this topic. It forms the basis also for the first ever international non-profit accounting guidance. Michelle Sansom from IASB and Ian Carruthers, CIPFA Standards Chair, will present the IFRS for SMEs and IMPAG proposals. They will be joined for the subsequent panel discussion by Mr. Vijay Kumar and Mrs. Assietou Diouf, Managing Director, Finance and Operation at GAVI, the Vaccine Alliance, so as a representative from a multilateral donor organization. So with this introduction, I immediately pass over to Michelle for us to hear her presentation.
So if I could have the slides, please. So let me start by saying how honoured I am to be presenting at such a prestigious event as the World Congress of Accountants. And I thank you to IFAC and to the Institute of Chartered Accountants India for this information, for this opportunity. It is very timely to be able to update on the IFRS for SME standard at the conference when we have the exposure draft, the third edition of the IFRS for SMEs accounting standard, open for comment. I will provide an overview of the exposure draft before looking at some of the more detailed proposals. So let me start with the objective of this profit. The IFRS for SMEs accounting standard is intended to apply to general purpose financial statements that are designed for entities that do not have public accountability. It's based on full IFRS accounting standards, but it's modified and simplified to reflect the resources that users have available, the resources that preparers have available, and the needs of users of SME financial statements. Let me just explain what I mean by public accountability. Generally, this includes entities whose debt or equity instruments are traded in a public market, or an entity that holds assets in a fiduciary capacity for a broad group of outsiders. That is, an entity who has assets entrusted to it. The standard is not intended for these entities. It's intended for entities that do not have these features. One more thing before we move on is about why we undertake periodic reviews of the standard. When the board was developing the standard originally, we were told that that periodic reviews would reflect better the resources that SMEs have available to them. Consequently, the IASB maintains the standard by periodic reviews, not more frequently than once every 3 years. So the IASB commenced this second comprehensive review in 2019. In January 2020, we published a request for information which asked for feedback on a framework for deciding whether, how and when to amend the standard. And in September 2021, based on this feedback, we published an exposure draft of proposed amendments to the standard. Now, in 2019, when the board started this second comprehensive review, it had two questions it needed to ask. What should be the scope of the review, and what approach should it take to the review? So let me talk about the approach to the review. In setting the scope of the review, it was clear that IASB members had differing views on whether the standard should continue to be based on IFRS standards. And as staff, we needed a way to manage these diverse views. So we came up with something that's been called the alignment approach. And what the alignment approach does is asks the IASB to consider three principles in deciding whether the IFRS for SMEs should be updated for new and amended standards. The principles are relevance. So to effect a change, the board asks itself, would the change make a difference to users of SME financial statements? If, and only if, the IASB identifies that the amendment of the new IFRS standard would make a difference, does it consider making a change? The board then considers simplification. In this instance, the board thinks about the resources that SMEs have available and looks at simplifying the requirements of an IFRS standard. So, for example, in this exposure draft, the board is proposing to introduce an expected credit loss model. But the board has, based on feedback, simplified the simplified model that we already have in IFRS 9, and then is proposing to apply it to a smaller group of entities, such as financial assets that are not trade receivables or contract assets. Finally, if the board has decided something is relevant and it can simplify the requirements to the needs of SMEs, it checks whether the transaction will still be faithfully represented. So in terms of the scope of this review, because in the first review the board had decided to not update the standard, it made limited changes, there are a considerable number of standards within the scope of the review. It is a very broad scope review. You can see from this slide that there are 8 IFRS accounting standards, the revised conceptual framework, plus the amendments and IFRIC interpretations. So having looked at the main proposals in the let's now look at some of the main proposals in the exposure draft. So to start with the conceptual framework. Now, the conceptual framework forms the basis of IFRS accounting standards, As the ISB updates its accounting standards, they are consistent with the revised framework. The ISB issued a new framework in 2019. To ensure consistency when applying the alignment approach, the ISB is proposing to replace the section of the SME standard that addresses concepts and pervasive principles with a new section that is aligned and consistent with the 2019 framework. Now let's look at some of the standards that the ISB is proposing to align with. Firstly, IFRS 3. Already the SME standards includes a section on business combinations, but this section was based on the original IFRS 3, and in this exposure draft, the board is proposing to update up until the most recent version of IFRS 3. So it will bring in consistent definitions of assets and liabilities that are in the new conceptual framework. It will update for the definition of a business because the board clarified the definition of a business based on feedback to the post-implementation review of IFRS 3. And the board wanted SME preparers to have this clarification, just as IFRS preparers had. We'll also be introducing the acquisition method, but we are proposing to simplify this. We will not change the definition of intangible assets that are acquired in a business combination, and we will not amend the recognition criteria. The board will not introduce guidance on reacquired rights because it assessed that these were not relevant to SMEs. And we will not introduce the option for measuring non-controlling interests at fair value because it thought this was the more complex option in IFRS 3 and it wanted to simplify the requirements. Okay, IFRS 9, let's move on to the IFRS 9, which addresses financial instruments, as you all know. Now, for IFRS 9, this was a standard that we broke down into individual topics. So we looked at classification, and overall, the board is not proposing a change, except some entities told us the examples in the SME standard sometimes don't fit the financial instrument we've had. So in those cases, we're bringing in a principle based on contractual cash flows to allow people to classify financial instruments when the existing guidance doesn't help them. We're also bringing in the expected credit loss model, as I said, which is simplified and would only apply to financial assets that are not trade receivables or contractual assets. So for those SMEs that have only trade receivables or contract assets, they will continue to use an incurred loss model. We felt this was a good balance of cost and benefits. The ISB is proposing, because the SME implementation group, the board's advisory group on SMEs, asked them to deal with issued financial guarantee contracts. So we're proposing to update the requirements there and to measure them at the transaction value, rather than at the moment where they're valued at fair value. The board decided not to amend for hedge accounting requirements that were in IFRS 9 because the requirements in the SME standard were viewed as working well. So you can see, in terms of IFRS 9, we worked hard to come up with a very cost-benefit balanced solution. For IFRS 10 and IFRS 11, which address consolidated financial statements and joint arrangements, what we heard in the request for information was that people wanted the key definitions in IFRS accounting standards and the SME's accounting standard to be aligned. So that's what we're doing. We're aligning those definitions, and importantly, we're not changing the classification of joint arrangements that are currently in the SME standard and are viewed as being simpler to apply than those in IFRS 11. And finally, in terms of standards that we're updating, IFRS 13, although the board decided in the first review not to update for this standard because it was relatively new, in this review, the board is introducing a new section. We're not changing when an entity applies fair value, we're just providing a little bit more guidance. And we've brought all the guidance that was spread throughout the SME standard into one place. And then so finally, IFRS 15, and this was based very much on feedback to the SME, to the request for information. We're proposing a new section which is completely restructured into the IFRS 15 five-step model. And we're providing guidance on how to apply each step. Some of that guidance is simplified from IFRS 15, contractual modifications, separating warranty commitments and variable consideration have all been simplified. But I'm told using the five-step model, structuring that section of the SME along the five-step model makes a very robust framework. So there were two standards where the ISB has decided not to propose changing. The first was IFRS 14, and this was quite easy for the board. They've got an ongoing project on rate-regulated activities. They didn't want to update the SME standard in this review and then update it again in the future, so they decided just to wait. IFRS 16 was a bit more complex. In the request for information, the board asked for views on aligning the standards. We got very mixed feedback about whether we should align. Ultimately, the board decided, based on costs of implementation and the benefits to users, where we know users of SME financial statements focus much more on cash flows, variable and fixed cash flows, that we would wait until after the post-implementation review. So that is a very quick overview of the IFRS for SMEs exposure draft. I'd encourage you to look on our website where we have a lot of supporting material. Last week we published an update to users of financial statements. There's a snapshot and various questions and answers. So with that, I'm going to hand over to Ian.
Hello, everyone. So my name is Ian Carruthers. I'm well known, I think, around the world as chairman of the International Public Sector Accounting Standards Board, but I'm going to be talking to you today in my capacity as chair of standards at SIPFA and talking to you about the international financial reporting for non-profit organisations. And the reason why we're sharing the platform today with Michelle and colleagues will become apparent fairly shortly. So, at the moment, we as accountants are incredibly familiar with international financial reporting standards. Some of you may be familiar with the international public sector accounting standards that IPSASB sets. But if you think about it, there are no standards for non-profit organisations around the world, despite the number of organisations involved and the very good work that they do. And that really causes a lot of problems in practice because you've got a very broad range of donor organisations, you've got a lot of organisations providing services at the lower level, and also there's a question about how do you actually get assurance over those statements if that's required. So a multiplicity of requirements. And I think I've heard this a number of times at this event. Really, if we think about what we as a profession are trying to do, it's actually provide transparency and assurance over information, which will actually allow systems to operate more effectively. And that's really what the premise is for the International Financial Reporting for Non-Profit Organisations project, that there should be guidance about how non-profit organisations prepare their financial statements, really from a point of view of providing greater certainty for donors, greater consistency in the requirements that they impose on non-profit organisations. From an NPO point of view, if the requirements are more consistent, that helps them. That certainly should reduce the overheads in terms of the costs of compliance and information collection with all sorts of different donor requirements. And from an assurance point of view, it should actually enable assurance to be much more effectively provided, both in terms of quality and also cost effectiveness. And really what that's about then is about a more vibrant, more trusted sector. And if that can be provided, then the resources that donor organisations are providing can more effectively be used for frontline activities. And that's, I think, really what is in absolutely everybody's best interests. So how are we delivering this project? Well, this is truly a global partnership. In terms of the organisations delivering the project, it's a partnership between two organisations, SIPFA, for whom I work, which is the Chartered Institute of Public Finance and Accountancy. SIPFA is not only unique in focusing very much on the public sector and also non-profit sectors, but also actually has standard setting responsibilities. And that's really our part in this partnership. So we provide the secretariat and I chair the technical advisory group. That technical advisory group is working with standard setters from around the world. The International Accounting Standards Board has provided one of its board members as an observer for our group and supported by Michelle and colleagues. And we also have input from regulators and from audit organisations around the world, including the Forum of Firms has nominated a number of representatives. So, if you like, that's the accounting professions side of things coming in. Humentum, as a membership organisation for NGOs, providing training and guidance, actually is very much acted as the convener in this partnership and also has very strong links in with the donor community. And they've been really the powerhouse behind raising the funding for this project. And through that, we've actually managed to get input from a lot of practitioners around the world. Certainly Tejas from India, I'd like to call out for, she's here, but we also have other country champions as well. And Humentum has very much been the powerhouse behind that, as well as chairing our practitioner advisory group. Now, how have we been approaching this? This project has had quite a long gestation period, if you like, probably dating back to 2013 when the UK accountancy bodies actually came together to commission research into the need for potential international accounting guidance. And that research actually received 600 responses from all around the world with very strong levels of support for producing guidance. But then the question was, okay, how do we actually make this happen? And that's where gradually this began to come to life through the International Forum of Accounting Standard Setters. But really where this took off was in 2019 when SIPFA and Humentum working together managed to secure opening funding from Ford Foundation and the Open Societies Foundation. And that is what led to the first real tangible product, a consultation paper in January 2021. We got over 200 responses from around the world to that. And that's what we've been working with in the development phase of the project. And that, as I'll mention in a moment, will lead to 3 exposure drafts coming to fruition with the final guidance planned for 2025. So how have we been going about this? Well, there was no way that we could actually even begin to contemplate creating a full series of accounting standards at this stage. So what we've done is actually to focus on, if you like, what might be called SMEs, in the non-profit sector. And therefore, we are actually building off IFRS for SMEs. Hence, the opening presentation from Michelle is incredibly relevant. Now, clearly, we understand the fact that the non-profit sector, whilst it has commonalities with organisations operating in the commercial sector, has a lot of differences. And really the question has been to work through what are the similarities, what are the differences in creating what will eventually become the international non-profit accounting guidance. And in working that through, we've looked at those issues, those challenges, and looked at what's the available guidance. Firstly, we've looked at is there relevant guidance elsewhere in IFRS, but we've also looked at the relevance of public sector guidance. And then where neither of those sources actually provides relevant guidance, we've also looked at national guidance. And in the technical advisory group, we've had really strong support from national standard setters around the world that has helped us in that. So that's the, if you like, that's the thought process that we've worked our way through. And this event is actually really important for us in terms of the fact that we have now reached the next important milestone after publication of the consultation paper, in that we are actually launching today the first exposure draft of the International Non-Profit Accounting Guidance. And you can see there the web reference where not only the draft guidance is available, but also support and explanatory materials. And if you want any further details, then I'd suggest that you visit colleagues from SIPFA who are here at the event. I think it's stand 58, if I'm right, and they have further details on how to respond. So a really important milestone for the project. In terms of what we're covering in this first of 3 exposure drafts, very much building off the order in which the IFRS for SMEs is presented, but we're giving a description of the types of organisations that we're setting this guidance for. It's not possible to be totally definitive about what a non-profit organisation actually is, so there's a description of the types of activities that NPOs undertake. We've outlined the proposed reporting framework, really building off the concepts that are in IFRS for SMEs, but drawing in appropriate concepts as well from the IPSASB conceptual framework and other guidance. You'll see proposals there in terms of the format of financial statements, which would be appropriate for non-profit organisations. And again, some important issues there for us to gain input to. And then, importantly, we're actually proposing that because it's very important to understand the nature of the activities that are being provided by non-profit organisations and the services for which they're accountable, that we should bring in guidance on narrative reporting. So there is a chapter on that, again built from various different sources and drawing on the feedback that we had from the consultation paper. So you have there a very good idea of what the coverage is proposed to be and the focus and the approach. And that's really intended to give people a good basis to respond on, but also the project to have really good feedback as we progress through the remaining stages. So in terms of the overall approach, as I mentioned, we've got 3 exposure drafts planned. The first launched today with a 4-month consultation period, so please do respond in the period to the end of March. Really important that we get your feedback and spread the word. We want as much feedback from around the world as possible as we move through the development of the guidance. Second exposure draft, we are then planning for the middle of 2023, and then the third exposure draft out by the end of 2023. All covering very important topics for non-profit organisations, and then we're aiming to complete the guidance during 2025. Now, the reason for the caveat at the end there on timeframes is we are dependent on the rate at which projects move through. So critically, we're dependent on the work that Michelle and colleagues will undertake in terms of the comments that they receive on the draft update to IFRS for SMEs and what they do with those comments. We will want to draw that into the final version of the guidance. I know, based on the heroic efforts that they made to get their guidance out early in the autumn, that that will, they'll do their best to make sure that we can stick to that time frame. Also, colleagues at IPSASB will play their part because we're looking at drawing on their guidance in the areas of revenue and measurement. And again, IPSASB has active projects on that. So 2025 is the aim for this guidance, and we very much hope that we will make that, but it is subject to the support that we receive and the comments that we have to address along the way. So that's the project in a nutshell. Please do submit your comments. We really do welcome all the feedback that we can get, and there will be a lot of events going on regionally with country champions leading work in their jurisdictions. So look at the project website, IFR for MPOs. If you put that in, you'll find the project website. Look at the explanatory material there. Take the opportunity to respond through the various different mechanisms we provided there. And please, if you can participate in some of the events that we're planning, please do take those opportunities. And with that, I'll pass back to Monica. Thank you.
Thanks, Ian. Thanks, Michelle, for the detailed explanations and clarifications on these two such important projects. And certainly they will both update in the case of IFRS for SMEs, but also create a basis in the case of non-for-profits for the future companies, because they really need this concrete, consistent, technical, high-quality reference for their development. But in that sense, I want to move now to our other panelists to hear their perspectives in relation to a practical approach of this standard. So in the real world, how would that work, and what are the perspectives on that side? So to start, Assietou, what do you see as the main challenges of implementing the new guidance in relation to IMPAG?
Thank you so much, Monica. And would like maybe to thank first our host, the Indian Institute of Accountants, for the warm welcome. Acknowledge the presence of two members of the project group in the room, Mrs. Desai, Mr. Subramanian, and Mr. Pratama, who are here today. So hopefully they will be able to share their own experience actually on the field and how actually we manage the project. And then maybe also from my fellow African representative, mainly from the Francophone region, who came from far away to attend this event. Bonjour. So there is no other way to describe the challenges we face than to take example from GAVI. GAVI is a vaccine alliance, well known in the health sector. It's one of the leaders in the global health sector. So delivering immunization to more than 73 in more than 73 countries in the world, and since its creation has saved 1 billion of child across the world. So how do we do that? We receive funding from international community, so donors, and we provide grants to countries. Today, GAVI is registered as a foundation in Switzerland. I do produce my financial statement under 3 regulatory framework. I produce my financial statement under the Swiss regulation for not-for-profit. I'd also produce using US GAAP, because at the beginning of the project, US was very keen to be, has led actually the funding side. But because I also have one of my subsidiary, I can put it that way, who's listed in Luxembourg, I also produce my financial statement under IFRS. And then what happens? I use this funding, which is entrusted to GAVI, to provide grants in more than 73 countries. In those 73 countries, which are mainly in implementing world, there is no guidance, and I do receive actually 73 financial statements to review. That gives you an idea of the challenge that we face in analyzing those references, interacting with the external auditors on the ground, for them actually to give us a quality assurance. So, concretely speaking, when we really want to be concrete, this is what exactly it means, the lack of having an uniform framework. So, I think, and I can talk from an end user, that this type of challenges needs to stop, right? We're dealing in the not-for-profit for impactful mission. It's not a matter of funding, it's a matter of impact and effect, and it's going to be, very, very welcome. Other type of challenges definitely are linked to capacity building. It's absolutely very difficult, given the profile of people operating in this segment, to find skilled prepper, or to find people who understand exactly how to manage the basic of financial management. So it's one of the challenges. in terms of implementation. And I would also, talk about the specificity of this segment, which is driven by donors funding. So it's one also of the challenges that we face. There is no one voice for donors. So if I look at the implementation for IFRS, for example, the weight of capital markets has really speed up the implementation from the private sector. In the public sector, engagement from leaders such as the World Bank has also been pivotal in helping the adoption of public standards. Here, we are facing multiple donors, right? And hopefully we will be able to get one lead who will really influence the trajectory and help us actually to lead the pathway to implementation. But let me stop here because there are so many, right? And I hope that this...
Indeed. That's a passionate team. And Vijay, what's your view on what are the main challenges regarding implementing IFRS for SMEs?
So thanks, Monica, and greetings to all. Monica, with your permission, I'll take a minute basically to explain for the benefit of largely the Indian participants here, and of course relevant for the other participants as well. India's connect with IFRS for SME, even though we have not adopted IFRS for SME as a standards framework. So in India, we currently have two accounting standards framework. One, what we call it in an abbreviated form as Ind AS, which is aligned or converged with IFRS, which is the full suite of IFRS, which is for public interest entities. And in India, unlike the rest of the world, the full IFRS is also applied for unlisted companies where there is no public interest, but whose equity is above $30 million. So there's a very large number of entities who actually apply the full IFRS framework in the form of Ind AS. Then we have the other framework called accounting standards, which is the framework which is applicable for the non-public interest entities and by a large number of non-profit organizations also, for the reason that currently we don't have a separate framework for NPOs. So majority of the non-profit organizations who have some commercial activity are mandatorily required to apply the accounting standards framework. We have taken up a comprehensive revision of this accounting standards framework under the leadership of Mr. Pramod Jain, Chairman of Accounting Standards Board, and Parminder, who is the Secretary of Accounting Standards Board, where the accounting standards framework are now being revised in the light of the same list of standards which Michelle had shown, the developments which have taken over the last 1 decade in terms of the definition of control undergoing a change, fair value, revenue, leases. So we have taken up a complete revision. So we are now in the process of finalizing that project, which will have about 32 standards. And just like IFRS for SME has 35 sections, we have 32 standards, of which about 25, 26 standards we have completed the work as well. These accounting standards and IFRS for SME are more or less similar, except that in the context of revenue standard, IFRS 15, just like IASB decided in the context of IFRS 16 that they will do the alignment at a later date, for IFRS 15, because the post-implementation review is still to be done, we have retained the erstwhile IAS 18 and IAS 11 principles. So sans that, the standards which we have are literally the same as the proposed product of IFRS for SMEs. So that's where India's connect lies there. And happy to share for the benefit of all the audience that when IASB took up the second comprehensive review of the IFRS for SME, we had issued the exposure draft in India. We almost had about 300 plus comments coming in, and across 4 accounting standards board meeting, we have discussed and submitted our comments to the IASB for its consideration. maybe have a little biased view because I am also part of the IFRS for SME implementation group. The product which has come out now has come out pretty well. It's been debated and it's come qualitatively good. But I hear a few implementation challenges from my conversation with colleagues, particularly outside of India, because in India we don't apply these standards verbatim, but I have the opportunity of interacting with professional accountants outside of India. And some of the concerns I hear from them are, one is around the definition of control, which we are now aligning with IFRS 10. But I think a good practical solution has been plugged in the form of a rebuttable presumption of the more than half shareholding, which I think is a good solution, but we will wait for the comments to come on the exposure draft. We have time up to June 23 for the same. So that's one implementation challenge I am hearing. The second challenge I am hearing, and I think Michelle touched upon briefly in her talk, is around the impairment relating to financial assets. So for financial assets which are trade receivables or those arising from revenue from contracts with customers, the IFRS for SME intends to continue with the incurred loss model, whereas for the other financial assets, we propose to apply the ECL model. So there's some who have a concern on applying two different models for financial assets coming from different sources. So people have some concerns around that. So some who believe that it should be incurred loss for all or ECL for all and not a hybrid model. But I think on balance, and just to borrow the expression which Michelle used and which is part of the due process handbook of IASB also, keeping the cost and benefits perspective, I think we have chosen to follow the incurred loss model for trade receivables, which is the case with most of the SME enterprises. So that's where we are, but people do have some concerns arising on that. The third one which I have heard is many people have been little puzzled about why have we not moved towards IFRS 16. In fact, I thought retaining the erstwhile standard was a good position because IFRS 16 is certainly a little complex, but there are many people who have been asking about probably we could have used this opportunity for even moving to the IFRS 16 principles as far as the lease accounting is concerned. And lastly, there is a bit of fair value usage which is going to stand enhanced when it comes to the SME product. So these are broadly the concerns I am listening. But these concerns are what we have heard even when the standards were being developed. I would encourage the members when they respond to the exposure draft to look at the basis for conclusions as to why these positions have been taken. And I'm sure when the feedback comes, the board will be more than happy to deliberate on what is there. And just one more point also, Michelle, I thought I should bring to your attention is on the development costs, R&D development costs, we are proposing to give an option of either expensing it out or capitalizing if you fulfill those 5-6 conditions. I think there's a very strong perception that it's likely to be misused, an option like this likely to be misused, and probably we should do away with the option approach and either stick to expense or if conditions are fulfilled, it should necessarily get capitalized. So these are broadly the high-level challenges which I am listening from the professional colleagues outside of India.
Thanks, Vijay. Indeed, based on one of the references you gave, probably one of the main challenges related to IFRS for SMEs is the fact that the original IFRS for SMEs is still not used all around the world. As you mentioned, there are specific national domestic standards which are equivalent to that, or several countries don't even adopt any type of standard on that purpose. And even in those countries that adopt, frequently the standard is still considered as complex. So we generate a mix of feelings in which it is important to keep updating according to what exists in the full IFRS to make sure that the financial statements do demonstrate properly the information of the SME based on the IFRS for SMEs. But at the same time, it's challenging to face the complexity, although quite less complex than the full IFRSs. And depending on the country, you also have other challenges related to the language barrier. So to have the standard, not only the standard translated, but also the support material. So guidelines, all the support materials. So besides focusing on the review of the exposure draft, which was already mentioned by you four, it's important also to consider what is being developed, what exists, what is updated on the support material to make sure that those that will be using will be able, we know that SMEs usually have strong resources constraints, so to make sure they really are prepared and capable to use the standards. But let's be optimistic. Let's check not only, focus not only on the challenges, but also on the opportunities. So, Assietou, which you would consider as the main opportunities with that?
Thank you. I guess the first opportunity I can see for the IFRS for not-for-profit is the fact that, you know, it is the last born, I would say, on the landscape, right? Or the future newborn, because it's not yet born, and glad that we launched it, you know, today as the first exposure draft. So we benefit from the lesson learned and the experience for all the, you know, guidance that have been published so far. I still remember, sorry, it's going to give a little bit of my age, right? But I still remember the beginning of IFRS when I was, you know, just starting my career. And the struggle of understanding the concept itself, some of you probably in the room still remember those kind of things, was actually one of the major challenges. Today, those concepts are well understood and easy to navigate as an end user. So I hope that, you know, for the IFAC, right, benefiting from all this legacy of previous regulation is definitely a very good opportunity. So it's going to have, it's going to be a very hands-on and user-friendly, if you allow me, right, framework because of that. Another thing I can say is for the users, the benefit of operationalizing only one unique referential. When you deal in the not-for-profit, specifically when you're part of the grant recipient of grant, there is likelihood that you will deal with, let's say, between 5 to 25 donors. Every single donor has its own requirement. So you end up providing a financial statement in almost, you know, every kind of format, though that is not actually the intent of the guidance. Let's be very clear about, right? We're looking at general, you know, general purpose financial statement here, not donor-specific requirement. But nevertheless, the benefit of providing one accepted and recognized financial statement will really help in this regard. And that translates into operational cost, operational gain, and cost efficiency. For the profession, I can see also it's going to facilitate the quality assurance mechanism. It's absolutely very important for all of us who are operating, let's say, in providing quality assurance, to have a referential you can really use when you're going to provide your opinion. I can see also a benefit from the donors community, right? For me, accounting is a language. I mean, for me, for all of us, right? We are professional. It's a language, it's speak. Right? And by being able to be heard using one common language helps actually the recipient to hear you. What do you want to say with your numbers? What do you want to say with your financial statement? Once actually we speak the same language, the communication, the understanding, and the use of this data will be immensely facilitated. And then lastly, it's for the profession, but also for the ecosystem, right? The not-for-profit is definitely, due to the impact of the mission, it's something that deserves that we provide a framework, right? It's not a matter of how much it costs in terms of value, it's how actually it really impacts and influences the ecosystem, the economic gain. So really, it's going to be a huge benefit for all those key actors in the landscape.
Yeah, certainly uniformity is something that will make a huge difference in order to make sure that information are not only appropriate, but readable to everyone and comparable.
Absolutely.
In order to avoid misunderstandings of different perspectives in information.
Yes, because we have seen the benefit in terms of transparency, instead of good governance, in terms of accountability related to adopting a common framework. So all of those actually will definitely benefit the not-for-profit, where you can say there is a lot of volunteers who may not be as skilled at that, as approaching those kind of pillars that we navigate when we deal with financial statement.
Vijay, what's your view on the opportunities?
As far as the opportunities are concerned, Monica, first and foremost is that we will have both the accounting frameworks for public interest entities and those for non-public interest entities coming from the same conceptual framework. So what's important is what is an asset, income, expense, liability for a public interest entity, and for a non-public interest entity has to be the same. So that's one of the most important advantages of having a product like IFRS for SMEs, and in India also we follow a similar approach. Secondly, as far as the presentation also is concerned, I think between both the frameworks we ensure the presentation is similar, and whatever relaxations are there, they are essentially in the context of measurements where we consider it's quite complex, and in the context of disclosures you try to keep it limited because you don't have a investor community or a large set of users there. So in that sense, there's no need for having two divergent ones. You have two frameworks, two sets of standards, but aligned to a common framework. The second important thing, I think it's a little emotional. People can have a different view, but my view is it's very important that the accounting professionals who have all become accountants through a same educational system, they need not get bifurcated over time as accountants who can apply the full IFRS and those who apply the IFRS for SME. So when both of them are coming from a common framework, the accounting professional, whether he is largely catering to the SME segment or he is working largely for the public interest entities, they need not have a distinction that you are capable only for this, not capable for this. So that's one of very important advantages I see of having a product like IFRS for SME based on the same framework. The third is we have all been witness over a period of time where entities have all migrated to become public interest entities over time. And now with all the conversations around startups and things like that, the good number of entities who start as SMEs, but within a reasonable time, they all become public interest entities. So when you start with a framework like, or a set of standards like IFRS for SME, when you become a public interest entity, your migration to the main IFRS becomes pretty simple, and you don't have too much of a difference in the equity figure which you carry forward, which would reduce the confidence of the user community on a product like IFRS for SME. So that's another important advantage which I see. And there are some jurisdictions where the local authorities allow you to follow independently the local standards which are based on IFRS for SME. And when they follow those for fit for consolidation, when they give to the parent, the consolidation adjustments to be done are also pretty limited. You need not do a whole host of lot of adjustments, particularly when you have pressures of quarterly reporting and you're giving financial statements which are fit for consolidation. So it's pretty simple that way as well. And lastly, even from a tax administration point of view also, from a government perspective, revenue perspective, when they are administering, if you have two accounting standards aligned to a single framework, for the tax administrators in terms of whether it's drafting a legislation or implementing a legislation, they'll have a reasonably good idea of how much is the taxable revenue which comes. So from these perspectives, I think it's a good opportunity, and this comprehensive review will get us very closer to the main IFRS in terms of the principles, more so after the new conceptual framework, which came effective 2018 or whatever time frame it is. So those are some of the opportunities I see.
Well, indeed, there are several opportunities.
Yeah,
so
yeah, plenty.
Thanks for bringing. I think it's important to let people interested on that. We are almost at the end of our session, but we got several questions. I want to address one specific question to both Michelle and Ian, because they both might apply to your different scenarios. Many jurisdictions are doing away with audit of SMEs. How do we avoid frauds and maintain quality reporting in absence of assurance?
I agree. We have seen most jurisdictions have 3 levels now: public accountability, something in the SME sector, and then something for micros. I think users of financial statements, we did a lot of outreach and a lot of discussion with users on the request for information, and they certainly see SME financial statements as a verification tool. So they'll look at the reports management have issued them during the year, and then they'll look at the financial statements. And I think even though some jurisdictions will do away with audit, I think some users and lenders particularly will want some form of reassurance.
Ian?
So I think the challenges that we're facing with this guidance actually come just at the moment from it being new. And if you like, the sort of implementation challenges and the opportunities not being well understood. And I think it's that whole communication piece that we really need to work on. And certainly there's a lot of material that we've put on the website which actually should explain the commonalities and the differences in the guidance. And I think then inevitably, as with all international standards, the real question comes around implementation and what goes with that. So if you like, the 2 communities that we're trying to reach, if you like, in terms of trying to gain traction on implementation are firstly the donor community. And I think we're trying to, the aim would be to encourage them to converge around this guidance. And then obviously that has issues in terms of assurance as well and the requirements that they would impose. And I think secondly, it's actually looking to sort of early adopters at jurisdiction level. So you've got those 2 levels. And again, then I think at jurisdiction level, you come into not only encouraging jurisdictions to pick up the guidance, but also what sort of assurance requirements would they put, what types, and so on. And certainly one of the challenges we've had is just who are we actually applying are we developing this guidance for? Could it be for the larger non-profit organisations? And the answer to that is, well, yes, certainly it could be. We don't want to exclude that. Equally, could it be for the very small SMEs that maybe hitherto have been reporting on cash basis and so on? And the answer again is yes, it certainly should be capable of being used. And I think that's where the dialogue between the preparers and the audit community is going to be really important in terms of establishing that understanding. Also, are there areas that we haven't yet considered? And I think both communities have something to say there in terms of dialogue back with us. So, I think it's going to be really important to get as many people as possible looking at this and the guidance used in as many different circumstances and different jurisdictions as possible.
Monica,
Thanks.
can I add a thought on that?
Yeah.
Yes. The International Audit Assurance Standards Board had developed a set of standards for less complex entities, audit standards for less complex entities. The exposure draft was issued last year. It's now in the process of getting finalized. Hopefully sometime 2023 it will get issued. And for those jurisdictions who currently don't have audits for the SMEs, I think that set of standards, those jurisdictions concerned, I'm sure this question is not from India. I think for those jurisdictions, I think they should actively look at embracing those set of ISAs and make audits mandatory for the SMEs as well.
That's a great point, thank you. So to conclude, Michelle, one last question to you, which is a topic that was discussed here. Some users believe that the exposure draft for SME is too complex, long, to very small and micro entities. How do you think about this and how to respond to micro entities' needs? Indeed, the question would be on what is the group doing in order to make sure the standard is usable by all sizes of SMEs?
So we do publish a micro-entity guide. So it is very challenging when we're developing the SME standard. And this is the SME standard. This is the exposure draft. So this is the total length of the document. So you can see how much simplification is taken from full IFRS standards to this document. But we do still hear, for micros, it's very difficult. So we publish guidance on our website for how those micros can apply the standard. But that is on the assumption that those micros are not undertaking complex transactions. So sometimes we hear, a bit like research and development, a lot of startups that might be micros would like to be able to capitalize research and development costs because they have the data processing systems to be able to do that. So it is a really fine balance, but we do plan to, once we've issued the standard, update that guidance for micro entities.
Thank you very much. And with that, after this great discussion, we're now moving to the end of our panel. So I'd like to thank very much our distinguished panelists, Ian, Michelle, Assietou, Vijay. Thank you so much for the discussion, and I'm sure everyone here certainly learned more and are more interested now on focusing on these new EDs that are just coming. Thank you very much.
I'd like to invite, do we have here the chair of Singapore chapter, Sydney chapter, Vancouver chapter, London or Netherlands chapter? Can I invite the respected Central Council member ICI, CA Pramod Jainji, then to come up on the stage and express gratitude to the entire panel. Thank you so much for your deliberations on the SME reporting. We'll first and foremost like to present a memento of gratitude to the moderator, Ms. Monica Foerster, Chair of the IFAC Small and Medium Practices Advisory Group. Thank you. Pramodji, I request you to stay so that you can do the honors for the panelists as well. We'd like to say thank you to Mr. Ian Carruthers, the chair of the International Public Sector Accounting Standards Board. And today, of course, as you rightly mentioned, you shared your thoughts as the chair of CIPFA, which is the Chartered Institute of Public Finance and Accounting. Thank you very much, sir, for your participation.
Thank you very much. Thank you.
Thank you. When we talk about the SME, it's always a balancing act. You want to simplify things at the same time, like the question came, how do you ensure there's no fraud? So it's quite a balancing act. We would like to say thank you to Ms. Assietou Diouf as well, Managing Director, Finance and Operations with GAVI, the Vaccine Alliance. Thank you very much. Stay on Pramodji. Pramod Jain, the Central Council member of the Institute of Chartered Accountants of India, and all of you did thank the host. So on behalf of the host, thank you to each one of you and all the delegates who are participating. We'd like to say thank you to Ms. Michelle Sansom, member Technical Leadership Team, IFRS for SMEs. Thank you very much.
Thank you very much. Thank you. Thank you very much.
And before before we thank CA P Vijay Kumar, let me tell you that right after the session, we've got a break for 1 hour, but once you're refreshed, please come back because from 7:30 p.m. onwards in Jasmine, we'll have a cultural event. So today, it will be the Shamak Dawa dance group and we'll enjoy dance like accounts. Dance is also universal language. So do join us. And finally, we say thank you to CA MP Vijay Kumar, member IFRS SME Implementation Group and IFRS Advisory Council. Thank you very much, sir. We'll have the memento to say thank you to you.
Monica, well conducted.
You can collect your individual mementos in a nicely packed bag while this one does for the photo opportunity. Once again, thank you to the moderator and the entire panel. Thank you to the delegates, to those who have joined us through the social media avenue. Thank you very much. With that, we conclude this session. Thank you. Thank you, Pramodji, for doing the honors.
Recording stopped.